Test 1 2, test 1 2. Then
Testing 1 2 3. Dennis, is there an echo? Testing 1 2 3.
looking for an echo, echo, echo. No,
All
just
right.
kidding. Looking for an echo.
All
Is
right.
there an echo on my voice?
I'm
Echo.
listening right
Testing.
now.
1 2 3. Looking for the echoes. S&P futures are trading down this morning. Retail disaster this morning. Is there an
Yeah.
echo on my voice? This is a test. This is
Switch it.
only a test.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Thursday edition of Benzinga's Pre-Market Prep, brought to you by Thinkorswim and TD Ameritrade. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. On today's show, our guest will be Steve Miller, not the musician, but the trader. He's 41-year career trading on the pits. Now he runs the site AskSlim.com. I'm sure Joel and him will have some good stories from back in the day. But before we get to Steve, we've got a bit of a mess in retail this morning. We're going to talk about that. A couple of earnings to actually discuss as well. So we'll try to get to as much of it as we can. I'll keep my spiel short. Joel, how are we doing in the S&Ps this morning?
Not too good, Spencer. We're traded down 4.5 points. We have found a brick wall in the S&P futures. Let's just call it 2267. All-time high 67.50. Multiple highs between 67 and 69. That's the key to any potential upside. On the downside here, not a lot of support until you get down to Wednesday's interday low at 56.25, and then you got a low in the close at 22.50. Crude continuing its move north here, found support in the lower 52 handle, now trading up 41 cents at 53.67. Gold also catching a bid here. Gold up 8.50 at 11.73.80. Silver kind of lagging up only a dime. So, Dennis, you were talking retail yesterday, and you said, man, this Kohl's is going to go either way. Well, it's gone.
Went both ways.
Yeah.
That was consolidation station, and I mean, technicals take a backseat when fundamental information comes out, and this is your classic example. So you actually saw the retailers pretty strong yesterday. Kohl's had a good day, finally broke out of its range, going all the way up, breaking out of those highs that we talked about from 50.50, went all the way up to 51.88 or 51.98 before settling at 51.88. But then right at 4 o'clock, right after the bell, they come out, and Spencer, what did Kohl's have to say to knock the stock down 15%?
Well, it's pretty much more the same. I was just listening, and we are good. No echo, so all good there. Kohl's cut their fiscal year 16 EPS from $3.12 to $3.32 to $2.92 to $2.97. So they cut it by about 20 cents. The estimate was $3.94. So they're missing that by about a buck. They also cut their adjusted fiscal year EPS guidance as well. So pretty much more the same.
Sales were down as well over the last quarter here, so not a lot of good news here from Kohl's. That's why you saw the stock go 50, 49, 48, 47, 46, 45, 44 handle here now, Joel. We're trading the 44s here on Kohl's, fills the gap, catches everyone. Anyone who was buying that for the breakout yesterday is caught on the fundamental news. Like we said again, technicals take a backseat when fundamental information comes out. And this Kohl's report or Kohl's information that they released after the bell was not good. Give us a level here on Kohl's, and then we got to jump in because this is just not Kohl's. Macy's came out with bad news too, and you have a retail disaster, which we're going to jump into all the retail stocks. But Kohl's, give us a level.
43.10. That's your first level. That is your pre-market low. You've got a bounce of $1.50. Since you've made that low. So when you have that kind of reaction and you move $1.50 off it, I think you find buyers coming in. After you hit that 43.10 low, you also hit 44. So that was a level. Then you're looking at the dailies, and I see some lows in the lower 42s. I don't know, Dennis. It may get there, but I just kind of got a feeling like the panic selling's over a little bit. And you're saying, and also if you shorted it in the hole, you're in a little bit of trouble. So I don't know. I'd be a buyer from 43 to 42 if I had a major 50,000 share position. I'd just be buying it every dime if it did take out that pre-market low.
There is just a ton of support. I mean, we have multiple lows September, October, November in the lower 42s. So if it gets down into the 42s, all kinds of buyers. I like that number you gave though too, 43.10, which is the pre-market low. We know a lot of times when we make a low in the pre-market, bounce off it. Sometimes those levels come into play in the regular session as well. So I do like that number that you gave as well. Also, that coincides nicely with the low we had back on November the 9th before we had the big gap up day, which was $43 on the button. So call it $43 psychological level there a little bit for coal. But lots of support down there. So if you were short this thing, I think you're probably bringing it in here this morning. I'm not surprised that we are seeing it bounce off those levels. There is a 13% short interest here in coals. So a lot of people making some money in this thing right now. And that's why I think that 42, 43 area is a good area. But, this is just not coals here. We also had Macy's come out just a couple minutes later, and they came out with bad news too, closing stores. They lower their guidance here as well. Spencer, what actually did Macy's have to say? Because Macy's traded down over 10% as well.
I mean, more the same there. They said that first of all, they're out. Let's talk about their guidance. They cut their fiscal year 16 EPS outlook from 3.15 to 3.40 to $2.95 to $3.10, and the estimate was all the way up at $3.29. They affirmed their fiscal year 16 sales decline guidance, which will fall in the 2.5% to 3% range. They said that their November and December combined comps were down about 2.1% year over year. Holiday season sales not looking good, and yeah.
This is a real mess. So we talked Kohl's. Kohl's had some massive support. Macy's low of the move, and this is funny. After we had this huge move after Trump used to. It's incredible that we're talking about the lows of the move. But Macy's got up to over $45 just a month and a half ago. But in the middle, when everybody's throwing them out at the beginning of 2016, or actually a little more towards summertime, beginning of the summer, in May it got down to $29.94. Now that's still 2 points lower than here. There is some lows in the 31. So you find support. Macy's, I'd say in the 30 handle here, maybe in the 31 handle. Joel, do you got anything else above that?
Interesting though. This one is not too far from that low. It's not getting.
No.
Yeah, I don't think they're done with old Macy's here. 31.85. That's a pre-market low, just hanging out at 32.30. So, man, there may be some more work to be done here on the downside. You mentioned the lows in Macy's. This was earlier in the year, 31.02. 30.82, and then the actual low of the move 29.94. So I don't think the big boys are going to be stepping in this heavy until you get to that 30 to 31 area, at least for today. Yeah. I mean, it's different. It's just a different chart. You've gotten a bounce. I mean, if you're looking at it, 31.85 to 32.75, that stopped it on a dime. So if you want to short it here, and in the interim, a lot of air above it, but this one's just. It's kind of hanging out too close to the low.
So those two stocks are the catalysts, and you had Kohl's, and obviously a lot of retailers start to get hit. But then when Macy's came out with bad news too, then they started hitting them all. The first stock you think about, actually, I did get shorts Nordstrom as well, and I covered too soon because scalper blood. But JWN, when you see bad news from Kohl's, bad news from Macy's, you automatically assume JWN's going to get hit here too. And JWN is trading down 5% in sympathy here, so they don't even say anything bad, but doesn't matter because they're a department store and they are hitting all the department stores. Dillard's is another one. It's trading down. Actually, it was trading down last night. Offered down the pre-market about over $2 here. Could open down even $3, I think. 4 or 5% seems to be where these sympathy plays are moving to. J.C. Penney is down 5% here this morning. Sears Holdings, which had a pretty good day yesterday, is bucking the trend here. There's some news on Sears because Sears was down after hours last night, and now Sears has actually turned green here. We're trading up 7% Sears. So Sears is bucking
closing
the trend,
some stores, I believe.
So they like the store closers at Sears, but they don't like it Macy's.
Well, there's that, and Stanley Black & Decker is buying Craftsman from Sears.
Again, some money.
Yeah, for $525 million.
There you go. So that's why Sears is bucking the trend here. It's more than having their own individual news. Sears has more problems than these other companies, and they're worried about surviving. So getting any type of cash infusion, selling, a brand is going to be good news for Sears shareholders there. So that's the different stories with Sears. But man, just jump into a couple of these charts like JWN, JC.
I just want to say one thing about the Sears before we move into that. Sears now is Sears and Kmart combined is now smaller than the original Sears, before the merger. with all the
Gonna
stores.
get a lot smaller.
Yeah, they're getting. I mean, retail hell. I mean,
Like
there's.
those Kmart's, are they even open anymore? I went into Kmart a couple years ago, and it was one of the worst experiences I've ever had in my life. First of all, the store looked like a dump. It looked like just everything was everywhere. And then I'm trying to figure out what the hell the price. I was gonna buy this. I don't remember. I think it was a hose reel. My hose reel had cracked, and I was gonna get a new one. It looked cheap. It was like $35. And then so I get, and it says $35. I get up there to the cash register and they can't find the sticker on the thing because the price was on like the shelf, it wasn't on the sticker. So then they send somebody back and they look. I'm literally waiting 10 minutes and they still can't find it. The guy comes back, he's like, I don't know, he can't find the price of the thing. I said, forget about it, I'm not even going to bother buying the hose reel, forget it, I'm leaving. I left the store without the sale. So that is absolutely ridiculous. I'm not sure if it's just that store, but that was one of the worst retail experiences I've ever had in my life, and I'm never going into a Kmart again. And secondly, the stores were just a dump. It was like everything was everywhere. Things aren't marked right. Just a mess. Maybe that was a management issue at that one store, but if that is a typical Kmart experience, I want no part of owning shares in anything that is related to Kmart.
All right, JWN, you asked for some quick levels on that. That is just hanging out here at the pre-market low. Not much of a bounce here, so perhaps some more work to do on the downside here. Pre-market low 45.98, just sitting there. So we'll see what happens on that. Support. Oh man, I don't know. Let's see if we can find. Can't really.
Scary.
Yeah, I
Because
mean,
what if because remember here back, and I'm just going, how the sympathy works. But remember in the summer, and they were all coming out with pretty good numbers, and Kohl's came out, and Macy's came out with good numbers, and JWN went up, JWN, then JWN came out, and it went up as well. So if JWN comes out with their bad numbers, don't think the party's over here yet. JWN could fall another 10%. So I'm concerned, and obviously with Kohl's and Macy's both coming back out, that's why it's down 5% because Wall Street is speculating that JWN could come out with bad numbers. If they do, I think there's more downside here, and I don't want any part of it either because this is just, it's a longer term trend too that we talked about for a long time. People are buying stuff online. They're buying stuff in different ways, and they're not going as much, to the traditional department stores. And we had this huge rally from May up to October, November. I sold my Kohl's. I had Kohl's in there. I sold it a little bit too soon, but I was like, I was wrong on this to buy Kohl's early. It came back. It went all the way up, and I'm like, I just think there's a change in consumer trends here, and I just want to lay back and sit and see what happens here. I don't think you have to run out and buy these things right away because there could be more work, like you were saying, to the downside. There's major concerns here that these department stores some of them are in some trouble.
And when is my retrade going to come into play here? Taubman Centers, based in Bloomfield Hills, Michigan. I mean, they hit.
I don't understand that either. What's the symbol on Taubman again? Give it to their
TCO, Taubman Centers, based in Bloomfield Hills, Michigan.
Yeah.
Big mall operator. I mean, their sales per square foot is just unbelievable. I think it's in excess of over $500 per square foot. I mean, maybe they're not. Man, I just can't believe there won't be some kind of concessions here. But I've been talking about this as an eternal short for a long time. Haven't pulled the trigger. I don't know what's going to drive these things down. I mean, but Macy's, I guess Kohl's is more of a outlot than in the malls. But Nordstrom's, Macy's, Saks. I mean, these guys are going to have to be asking for some rent concessions soon.
It's a great argument you make, and I don't understand. And the market can stay irrational a long time here, Joel. But I agree with you here. I mean, there is a 3% yield on Taubman, so maybe it's the yield that's holding it up. But if you think about it, if people are buying everything online, shouldn't your mall itself come under some pressure? And it hasn't. I mean, TCO, if you look at it, has held up very well. Even when we were having the disaster of the retail back in April when they were selling all the retail stocks, TCO would not budge, and then it had a big rally. And it has just hung out. If you look really here at the monthly chart, TCO is not that far from all-time highs. All-time high was set back in 2013, up at, $89. So I guess it's still 14 points off it. But, you're talking some retailers that are half of their all-time highs. And here's, the place where a lot of these retail stores are, but it just holds on. So I'm not buying it, but it's hard to short, though, because it doesn't go down.
Is there other mall REITs that I'm trying to think
I'm sure there is.
What's General Growth? Did that go off the board? General Growth, GGP? I don't know.
It's still there. GGP's still there.
Yeah, no, this one went from This did go bankrupt, and then it must have reemerged out of 67 to 40.
3.4% dividend here too. These things have big dividends,
Yeah.
and that might be what holds them up a little bit too. I mean, if we do go into a rising interest rate environment, that's not going to help. But I think now we're talking maybe 2 rate hikes this year. So you know what happens if the economy starts to get weak, then they don't do any rate hikes. So the Fed's always got the markets back, and that's why it's really hard to bet on interest rates skyrocketing up 3, 4, 5%. I just can't see that happening. So. But you get a 3.4% yielder. People are hiding in these places right now. They're looking for dividend. They're looking to get paid. They hate getting nothing on their money, or if you're in other countries, you can get negative interest rates here. So it's difficult to short something that's got a 3.4% dividend.
All right. Well,
But Cole worked with Coles though, because Cole's dividend is 4.5%. So
it's probably
it does work.
6% now. How about not every retailer is in the dump here? Costco. Costco had some good news last night, right, Spencer?
This morning, I think.
Yeah, they had some. They had something this morning. They got it upgraded by Citigroup to buy.
Now the thing about Costco is,
I'm sorry, that's not this morning.
I think there's revenue. I think there was revenue numbers with Costco.
You know what? I don't actually see them, so let me hunt them down for you.
We're getting close to it. Now the thing about Costco is, man, you can't just buy that stuff online. I mean, some of the stuff, but I mean, it just would be too heavy to ship it, right? It's food.
A lot of it's food, yeah. I think Costco's a little more resilient than some of the other stores, to buying stuff online. So you look at those Costco's and you go in there. They actually did announce their sales for December. That's why it's trading up. The sales were up 5% in December. Their 5-week same-store sales were up. I think I'm seeing over 3% as well. Spencer maybe verify those numbers, but they were decent numbers for December in their sales. And if you go in those Costco stores, it's not like a Kmart experience. It's usually besides being so crowded that you can't move, the experience is always good. Like you get to eat stuff in there.
Yeah.
You go for lunch there, don't you, Joel?
Exactly, man. You go to all those, and you feel kind of guilty when you go back like the second time to one of those stands because
the third
and you're not
and the
getting.
fourth.
I'm like, Lisa, could you go grab me that? I've already been over there twice, and then she goes over there. It gets it for me. But for our Costco traders out there, I just want one level I want you to keep an eye on. 162.07, that's your pre-market high. A trio of highs in the higher 162s, 162.76 to 162.85. That was a trio of highs at the end of December. We've lost a little gas, so we may not see it today, but keep an eye on that over the next 3 or 4 sessions.
Bob Wire's got a good one. He's saying SPG, Simon Property Group, is a mall REIT as well. And SPG actually is trading down 1.3% here in the pre-market. So maybe we do have one that is moving with these stores obviously trading down. Closed at 184.08. It's trading now at 181 even, just with an odd lot. Is offered at 181 as well. So maybe we found one, Joel. We got a mall REIT here that's trading down.
Very good, Bob Wire. That's why we have you guys on the show here. This one has had a little bit more damage inflicted. This is the one I should have been looking at. 229.10. That was in August. But I think I was talking about this trade at the end of 2015, so that wouldn't have worked out so well. But this one is, good chart there. I'd like to see where they're located. I think if someone's doing some research here, finding out who, what retailers are in what malls. I mean, if I was a retail or a mall owner,
That's a great point.
I had Macy's, man, I'd be like, I wouldn't be answering my phone today with any phone calls from what's New York's area code? 212? 212.
Yep.
All right.
That's a great point there too. Look at the retailers, and we can find that information on which stores are in, obviously which mall retailer. That's going to help. I don't know. Maybe Simon Property Groups has some Macy's, maybe it has some Kohl's, maybe it has some of these other ones. But like we were saying, Nordstrom, Gap. If you want to go through the retail disaster, just real quickly here, we won't go into all the charts. But even Target. Target's traded down 1.5% here this morning. Walmart's down just a little bit here. You have American Eagle Outfitters. That's down 6% here now. AEO. The Gap GPS is trading down 3% in the pre-market. Urban URBN trading down in the pre-market here. Even like Michael Kors, Kors, that's down 4.5%. This is all off of Kohl's and Macy's. So here you are, all these other retailers. Your stock's getting punished because of something else that obviously another company said. But all similar. Obviously, sell Michael Kors stuff in the Macy's. So you got to think, maybe Coach, COH is another one you think about. They sell the Coach bags, obviously, in Macy's. Coach trading down 3.5% here as well. So it is a retail disaster here today.
Just keep an eye on the pre-market, just in general for all these. I'm not going to pull up all individually. Keep an eye on the pre-market low. Try and find a low or a pair of lows on a daily chart that coincides with that, and then you can have some potential targets on the upside.
If they've
on
had
the
some
downside.
volumes.
Yeah, if they keep
Some of
going.
these haven't had a lot of volume yet.
Yeah.
So I would even reach into, like, I'm scared of all retailers here today. Like Dick's Sporting Goods hasn't traded here this morning yet, but it's offered down 50 cents in the pre-market there. Even Nike. Nike's trading down 1%. I mean, what's Nike have to do really with Kohl's? Not that much, but and Foot Locker, I saw it trade down as well last night. It's traded down $1 last night, and it's offered down 50 cents in the pre-market. So there's going to be a lot of retailers that are under pressure. If you're a retailer, you're hurting here today.
All right, we have Spinner saying, remember we had some option put buyers bombarding the XRT and targets for the last couple weeks. And yeah, let's real quick though. We are lucky to have the Federal Reserve Chairman in the chat today, Janet Yellen, and she is asking about Clovis Oncology. Dennis, was this one of the disasters did you pick this one up?
No, I do not have Clovis. No, it's one. I wish that was one I should have picked up actually, because it came back after their disaster. A little bit it came back, anyways. Clovis Oncology. So in 2015, this stock got murdered there. Went from $99 down to, I think it was like $38. Can't remember goldfish memory going back a year and a half. My goldfish memory is 6 seconds, so I don't remember what the news, but obviously drug news. And it got hit for the rest of 2016. It got all the way down to $11, but it's come back. We're back at $44 here after being down at $11 in July. So CLVS, don't call it a comeback, but I'll call it a comeback. That's not if you bought it $100, but if you bought it anywhere in the last 6 months, you're doing pretty well.
Yeah, I mean, for this one, when you get a big gap here, obviously we can't predict it, going back to fill that gap up there. But you always like to keep the eye, your eye on the high of the move. Obviously, you had some good news on the issue when it sprinted to 46.97. That got a little bit overdone. Now, it's really a quick rally here. I don't know what came out over the last couple days, but you just want to see it, go up, take out that 46.97, close above that area, and then inch its way closer. Also, we went from 116 to 10. So that, call it a 100-point move. So you add 50. I mean, 50% retracement. You could do the exact math. Would be a nice target up in the $60 area. But once again, these stocks are subject to drug trials. So keep an eye on your drug calendar.
I actually did have some earnings reports here. So we are getting into the start of earnings season here. Fourth quarter from last year starting to get reported. Sonic came out last night. You had WBA here. I don't know if we've actually got the Walgreens numbers here this morning. I've been waiting for them, if they've crossed yet.
Yeah, we got
Did we get the WBA?
Yeah,
what,
I see him.
What are we looking at?
Adjusted EPS, $1.10 versus $1.09. Revenues of $28.5 billion versus $29.2 billion. They see their fiscal year 17 EPS at $4.90 to $5.20. That's in line with the $5.01 estimate.
Joel, thoughts here? WBA, it's not really doing much. I mean, we've only traded 1,600 shares, so it's pretty early yet. Still digesting this earnings report. I mean, obviously, it's a retailer, but I mean, a drug retailer. This has absolutely nothing to do with Kohl's. So even though they were hitting it a little bit last night ahead, just because they were hitting every retail stock, I mean, this is going to trade on its own report. Just hanging out here. It's down 3 cents in the pre-market. It is offered there at $82.95. Best bid's down $82.64. It did tick up to $83.64 briefly here before going red. This is just kind of hanging out, though.
It's just tight ranges over the last few sessions here. Let's call the support at the 82.30 area, another low at 82.42. So I'd be keeping an eye on that. And then on the upside, needs to clear 83.88. That's your 4-day high. So this has been in a tight range. Maybe see, which way it tries to go in that range. But really, no movement in that. Backed off its all-time high here of 88, trying to gather support for a new move higher.
Monsanto had earnings. Obviously, that's not going to move that much on its own earnings report because there's still the deal with Bayer on the table here. So even if Monsanto blows it away, it's not going to really. It's all matters more to Monsanto is what's happening with the merger. But give us the Monsanto numbers because it is trading up 45 cents in the pre-market at 105.50. Quite a bit of volume. 16,000 shares already traded for this $100 stock. Spencer, what were the Monsanto numbers?
Well, the Q1 EPS 21 cents. The revenue did blow it away, 2.65 billion versus 2.28 billion dollars. And as far as the some guidance goes, we got their fiscal year EPS at 450 to 490, and that's in line with 472 estimate.
And just hanging out. Lots of resistance up here at 106, like a
Yep.
brick wall up there from a technical perspective. But this is also subject to whatever news potentially can come out at any time due to the Bear merger. There's a merger on the table. I think, is it 128? I'm just going, this is, from my memory, so I missed, but I think the price is up at like $128 a share if the deal goes through. Deal doesn't go through, then you can see the stock obviously, start trading off of its own company fundamentals as well. I think there's a lot of skepticism. That's why there's a 23-point discount onto whether this deal is going to get, antitrust approval here or not.
Do we lose Dennis there?
I'm here.
Oh, okay.
Lose me?
106, that's your good resistance in that. I did see dip down to 98. Not quite. Didn't get down to the level Dennis would have got interested in here around 92. But actually, the day up, when it gapped up, it had, kind of hung out at the $98 area. That was the pullback here. But seems like deal or no deal, there's sellers at 106.
Then you had ST Zebra, your alcoholic spirits maker here, trading down $4 in the pre-market. They reported earnings here as well, assuming they're a little bit disappointing because down $4.
This is STZ? No.
Yeah.
ST Zebra, Constellation
I
Brands.
remember that ticker for some reason. They reported Q3 EPS a $1.96 versus a $1.97.
So missing by a penny. People weren't drinking as much on the holidays.
I can't read. A $1.96 versus a $1.71.
Yeah, they had good
Well,
numbers.
they beat.
That's the correct number.
And they raised guidance, right?
And they're still hitting it?
Yeah. I don't understand.
What did this do after? What did this do pre-market? Did it get a pop and a drop?
Yeah,
Or
it went to 160.02 and then went down to 150.
pulled the rug out from under it?
Yeah, I don't know. Maybe just selling the news here on a decent report.
I'd run up. It'd run up for 7-8 days before the report, so it's something to think about.
All right, 151.99. That's your pre-market low. For me, if I'm trading this thing, I'm keeping an eye on 150, 58, 57. Double bottom from December 27th and December 28th.
And then Sonic, SONC, reported earnings last night. Your hamburger chain there. Spencer, what did Sonic have to say?
I love my Sonic. They reported Q1 EPS 24 cents versus 21 cents. Revenues 129.5 million versus 130.7 million. So a beat on the EPS, but a slight miss on the revs. They did report same-store sales of down 2% to even, and Q1 comps are looking to be down 2%.
Do you really like Sonic? Or
Yeah.
is that they're saying?
No,
Really?
I like Sonic.
Because I get sick just looking at the food on the commercials.
Yeah, you gotta not order the food on the commercials. You gotta order
Like
the
those-
You don't eat at fast food restaurants, do you, Joel?
No.
Yeah, I do. So but like I said, I've ate a Sonic only once, and I ordered wrong because I ordered off the value menu. I should have ordered the regular. I didn't get a milkshake either. I heard the milkshakes are good. So I'm jury's still out for me on Sonic.
All right, trading down just a few cents here. I could give you some good support and resistance. Good resistance up at the trio of highs at the 2720 level from the last three sessions, and then real good support in the lower 25 handle, 25.30 and 40. I see a bunch of lows in that area going back until early November.
Okay, Ace has been pounding the table here on HALO the entire show here, so we got to give him some props. Good job, Ace here. HALO trading up 22% here in the pre-market. The stock has been all over the place here. Joel will give you the pre-market range, while Spencer will give you the news.
1705. That's your pre-market low.
Got to
And
1705.
yeah, good thing you weren't looking at it at 15 on the way up, Dennis. Or maybe it would have been a good thing as it went to 1705, and then We'll let Spencer give you the story. Adam F., man, if you're trading biotech stocks, you don't have him on your Twitter feed, you would have gotten clobbered. Go ahead,
Yeah,
Spencer.
well, so their drug, Hello's Mind, phase 2 met primary endpoint, so that's good news, but I would point you to the Adam Feuerstein of the street. Is the esteemed biotech reporter is tweeting about this drug this morning. Said, Halo followers, did you read the PR closely? Seems that they're only reporting positive results from a subset of pancreatic cancer patients. He is listening to the call now. Said the data is a muddled mess. His latest tweet we got a few minutes ago now. Halo stage 1 data, stage 2 data. Throw against the wall, hope something sticks. So he is all over this thing, and I would be watching closely if you are in it.
Okay, I just want to say, without saying Halo here, we got to talk about Twitter accounts that you absolutely must follow here. And, obviously Donald Trump was probably the most influential Twitter account here right now. If he mentions something about a specific stock, he's got to move the stock 2 or 3%. If you are a biotech trader or in pharmaceuticals, you have to follow Adam Feuerstein because he is a mover and a shaker. If he says something about a company, it will move the stock. So that's another account you absolutely have to follow. Obviously, Citron, we've talked about them in the past. They are a mover. Carl Icahn still moves stocks as well. You got to be following his account as well. But if you are in biotechs, Adam Feuerstein is a must follow.
And he knocked it down here. Actually, I saw that tweet go by when it was up at 17.05. I mean, these stocks. I mean, if you're fortunate enough to be in them, when they make these kind of moves. Obviously, there was some good news here at back in early November, straight up for several days. Man, took out the former high at 14.19. So I think that will come into play now. Throw out the high, throw out the low. Go to your daily, 14.19. We'll see what happens there. That was your high from, as I said, November 16th.
8:30 here. We just had imbalances come on. I might as well take a quick look for the first time. Hot off the press. Citigroup 109,000 to sell. That's the only one in 6 digits that's stepping out. Ford 131,000 to buy. Ford has been resilient. You want to talk about 2 stocks? Let's talk about these ones. Ford and GM. And here's we were just talking about the tweets and the Trump. It seems when Trump comes out and talks about a company, it seems to move 2 or 3%. He says bad about a company, moves down 2 or 3%. These have been fantastic fading opportunities. So basically, Trump coming out on GM just 2 days ago while saying, about whatever, that car that was made over in Mexico. Well, when you start analyzing it, so they knocked GM down 2% on that in the pre-market, saying, there's going to be some taxes coming in. But, when the smart money comes in, they realize that vehicle there, is just a small portion, of what revenue is for GM here. Very small portion, way less than 1%. So you start looking at it here and analyzing it and thinking, wow, this is ridiculous. They knocked GM down 2% on this. And they actually, that day, they actually opened it flat, and then it started to rally. So you had a great opportunity in the pre-market with stock was trading down 1 or 2% to buy it, fade it, and 2 days later, GM has just been taking off. So same thing was with Boeing when he's saying bad about Boeing. I think Lockheed Martin was a similar story here. So the fading the Trump tweets has worked very well. I don't know if it's going to continue to work like that, but it has worked well if you've been fading them on these 3-4% moves just off of a tweet.
All right, real quick before we go to our break, let's take a quick look. It looks from DC1. Happy New Year, DC1. DFT and Depot Med. I will just DuPont, FabrosTechnology.com. That chart looks pretty good. Look at 46.28. That's a pre-market high. Looking at the dailies here, not much until you get above 47 here. So check out that high in August. And then also the other stock that we were looking at.
DEPO. This has been flying. So
Yeah.
this stock has had an awesome 3 days. I'm not sure what they announced 3 days ago. I do not follow the company, but gapped up from 18 up to over 19, ran that day over 20, continued the run yesterday, so you had the gap and go up to 21.31. It is down here this morning. It's trading down $21 here in the pre-market, so giving it back a little bit here, but DEPO has been a runner here. I do see a overhead supply here, though, just in the upper 21s.
There's some M&A chatter. Is what
Is that what it was?
Yeah.
Spencer always got her back.
Yeah, and I think there's an activist in that stock too. I can't think of who it is, but 8:34. It's time to bring on our first and only guest of the day. That's Steve Miller. And no, he's not going to sing Fly Like an Eagle. It's a trader, and he runs a site, AskSlim.com, a floor guy. We'll be right back with Steve
We
Miller.
love the floor traders. Yay.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks. Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks. Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel. And we have Slim, don't call me Steve Miller, on the line from AskSlim.com. Slim, how you doing today?
Hey, guys. Good. Good morning.
All right. Well, 41-year trading career that started out on the floor. And I think you were on the SIBO. So what we do when we get a floor trader on, we ask for like their favorite floor story. It could be a good one or a bad one. What do you have for us, Slim?
Oh,
PG,
that's
though.
funny. Well, actually,
PG.
May will be 43 years. I started on the
Wow.
CBOE May 20th, 1974. So it's been a long time. And when I got there, actually, there were no puts. We were only trading calls, so it tells you what it was like back then. My all-time favorite story is two guys were trading in the IBM pit, and they were really arguing and fighting. These two guys went at it all the time. One of the guys was chewing gum, and during the fight, the gum flew out and landed on the other guy's shoulder. And the guy called floor officials over, and he refused to remove the gum, and the guy that spit it out refused to remove it. And the argument came about who was going to remove the gum from the guy's shoulder. So it got pretty petty on the trading floors, let me tell you sometimes.
The floor official come in and just remove the gum then? just so there wasn't a fight?
Right, and those guys fought all the time.
Did you ever get fined down there for anything like not having?
No, I know. I never did. No, I was one of the good guys. In fact, I was a floor official for a little while. So.
Oh, so you would be the one. The only thing I got floor fined for was throwing trading cards, which everyone did all the time.
Everybody did that, yeah.
Yeah, but I don't know. This one guy.
You did too much, didn't you,
He gave me
Joel?
like 6 warnings, and I let it go, and next thing I know, I think I had a $50 fine.
Yeah, they were always zipping. You were throwing them up to your phone clerks or something like that.
Yeah, they used to catch them too. I wish I had some videos of that. But anyways,
Yeah.
you run a site, AskSlim.com. You've coached numerous traders, and you have 5 essential building blocks of being a successful trader. Could you touch on a few of those?
Yeah, I mean, basically, it's that particular workshop is it has a kind of a psychological overlay to it, where we look at the 5 different categories: are understanding how you have an important role for trading in your life, how to build emotional fitness so that your reactions are in control, making sure there's a good balance on your style and method and personality. adopting 6 important rules of discipline. And the fifth one is creating your own proper formula for success so that you have the right expectations of profitability, because having expectations that are too big or too small really can contaminate your trading results. So that's the basics of it. And it's a 6-video workshop. It takes about 4 hours to do, plus workbooks and stuff. So it's really good. I mean, that's really the smallest thing we do. We produce 9 categories of trader videos, 4 new ones a week, including, those are mostly for members, but we do a free show every Friday called Ask Them Market Week. So we have a lot of videos, a lot of training, and plus we do as a lot of sites do a lot of analysis and give trading setups and analysis. Plus we share our charts to our top subscribers.
Slim, I've got a question for you, because I've been trading now professionally for 17 years, so you've got a little more experience than me. And this is something I've never been able to figure out in my 17-year career. And this is how to maximize winning trades, because I also, too, is like playing market maker, electronic market maker, so a little bit different. But I have what I call scalper blood in me, and I'm very good at entering. I'm very good at getting the setups, but I always get out too quick. How do you hold on to these trades and maximize these winning trades?
Well, there's 2 aspects to that. One is technical, one's a psychological. The technical side of it is that you have to have a momentum indicator that you believe in. So in other words, when the momentum indicator tells you that something is moving up, you then can stay with that because you believe in the indicator, even though the noise in the market may get you nervous. Now, that's the second part of it, which is the psychological aspect, which is that you've got to really understand your own emotions and triggers so that when little moves or noise in the market comes, you don't get shaken out. And a lot of that is about the fear of losing or the fear of giving back the profit on a trade. There's a lot of stigma about that. So if you can overcome the psychological aspect of it and then have the momentum indicator, you can stay with trades longer. The key is to overall long success is your winners have to be bigger than your losers. Not that much, but bigger. And you have to have more winning trades than losing trades.
What about improving your entries and your exits? You've also got that on. Can you just go into that a little bit? Like, especially like the entries I'm pretty good at, but, just improving those exits, into the execution side of it.
Well, we do a lot of work with, especially for our chart subscribers, on creating support and resistance zones. And then we do cyclical analysis. So we essentially know rising and declining phases for the different of the 400 symbols that we follow. So what we look for is pullbacks to support in major rising phases, which gives you an advantage on your entry, both in price and in lower risk to your psychological capital. Same thing for your, if you're looking for short side trades, is letting declines establish and then look for upside rebounds into resistance zones, and then that is your entry on the short side also. So we're essentially looking for counter trend locations to get into our entries so that we can raise the probability of success based on that.
Slim,
I hope that was clear.
Yeah, it was very clear. Slim, you've lectured on topics of cyclical and technical analysis here. Let's first attack the technical analysis, which probably, back on the floor. I mean, you had some of these guys with their little pencils doing pointing figures here, so we could obviously talk about the evolution of technical analysis. But share with us, your charts, your time frames, and some of your favorite setups.
Well, the cyclical analysis is a variation of technical analysis. And so my favorite setups for let's say for the long side is after a significant decline has occurred and then a basing period occurs. So what a basing period is where there's a rhythmic motion in the market. In other words, there's been a decline and then a rebound. And then the pullback does not make a new low. And that happens within that specific time frame that we're looking for. When that doesn't make a new low, and then you start to break out on the upside again, then essentially you've established an upside move and a new rising phase. To me, those are the highest quality periods to be buying stocks, is when they have established a base after some significant decline. The reverse of that, of course, would be near the highs, where it's made a nice upside move and then had a pullback and then failed up at those highs and then is starting to move down again. So what we look for is essentially compound formations to confirm specific important high and low levels. So like I heard all the discussion about retail stocks today, of course, and those are the most stocks in the news. Those have been in declining momentum and declining phases for us for quite a long period of time, and a lot of them reestablished the downside about a month ago. So we would not be buying those at all because they're still in declining phases. They have a lot of work to do before we can buy them, though there's a couple of them that are okay.
Slim, from the chat, we got... Oh, okay. Just from the chat, we got Violin Maker asking you, what are some of your favorite momentum indicators?
Well, I have a few of them. Usually they're based on moving averages, but there's one called MOBO breakout bands or momentum breakout bands. They are similar to Bollinger Bands, but they're, instead of operating on 2 standard deviations, they're 0.8 of a standard deviation, and you can really get a sense for momentum on those. My next or equal favorite one is one called the Slim Ribbons, which is a multiple moving average, exponential moving average, that gives just amazingly good signals. And that can be found right on our website, the Slim Ribbon under our resources. So those are really my 2 favorite momentum indicators. Another really good one, though, is called the Hull Moving Average, HULL. And that one is also a very solid momentum indicator. Those are my 3 favorites.
Is that from Blair Hall, the Hall Trading?
No, I don't think it is, actually.
Okay. All right. Just, overall, market thoughts here. I know you do a lot of work, both long-term and short-term here. And I was just thinking, what if the low for the year is already in? I mean, everyone talks about the January effect. This market not even getting hit today. There's some disaster retail. Just from, technicals, what are you looking at here? Let's just go basis the S&P 500.
Well, I think that there's 2 important parts to that answer. First of all, we've been in upward momentum, and our upside target has been 2290 to 2300 on the S&P 500. We've been picking that number for now quite a number of weeks. It's been moving up, and I think our subscribers can vouch for the fact that we've been calling for that. Also, there is a reoccurring pattern that calls for a intermediate top to form sometime in the next month or 2. And then a repeating pattern that has occurred 5 times in the last 2 years that calls for a decline in the S&P 500 of 100 to 200 points. So we're looking for a significant peak to occur here cyclically in the next month or 2, and then a significant pullback. Whether or not that is going to be a major top will be answered by whether or not it can approach the last important low in the S&P 500, which was down way at 2083. But we're calling for 100 to 200 points on the downside. If it approaches that level, we will have a major top likely made. And we expect, and if you take a peek at our annual show, which happens to be on our front page of our website now, we are calling for 2017 to have a bear market in it into the summer. So we think an important top is going to form here quite soon.
Before we let you go, Slim, I just want to ask you about your transition from the floor to being a screen trader. I guess, tell us that, your biggest takeaway, the most important thing you learned from the floor, and then follow that up with, what was your biggest obstacle when you were switching to screen trading?
Well, first of all, I was one of the first people to leave the floor. My style really had me, though I was trading in the OAX pit when it started, my style really had me trading a lot of things like a lot of equities and futures because I was also had a team on the Merc that was executing for me in S&P futures, the big contracts. So I was naturally trading out of the pit a lot. And in '84, I left to trade off of a desk, though I popped on and off the floor into '91. It was a very natural transition for me, and I've coached lots of people that struggle with that. The big difference, of course, is that most floor traders were accustomed to getting an edge, trading an edge based on the bid-ask differential. And then in options, of course, doing spreads and spreading off that bid-ask advantage that they would get. When people leave the floor, the biggest obstacle to success was really that there was no more bid-ask advantage for them. And they were essentially now having to learn to trade off of momentum and technicals. That was an enormous transition, and many people could not accomplish that at all. So it was very hard for a lot of floor traders to make that transition. It was easier for me. My biggest obstacle, and where I had the most difficulty, was the fact that high frequency trading, when that came in, that really changed the nature of the market. Most markets, the noise that occurred in the market that I lived off of, that a lot of traders lived off of, which was just the wiggles, they created such deep markets and created such narrow bid asks that the normal fluctuations that we lived off of disappeared. So you didn't get a lot of, occasionally we get a day with a lot of chop in it, but mostly we're living in momentum markets, and that's been since the beginning of the high-frequency trading. So I think that was my biggest obstacle, was that. And it still remains to be so. You really have to be a momentum trader these days. If you try to fade these markets, you're going to wait forever to get your money back. And that's especially true for option traders that use strategies that put them deep in holes that are in these big momentum markets. That, I would say, is the biggest difference.
Slim Miller, a trader, runs a site at aslim.com. Thanks a lot. Everyone really likes you here in the chat. So do Dennis and I. We'll have you on again soon.
Good. Looking forward to it. Thanks for having me.
Thanks, Slim.
All right. Oh, I forgot to ask him if his badge was Slim on the floor.
Yes, it was.
That's an awesome nickname, though, for
No,
the floor.
it was. That's how we got that nickname.
Okay.
Yeah.
All right. S&P futures have battled back here, Dennis. Down only 2.25 now.
Resilient.
Yep, resilience. You were talking about, wow, why didn't you just whack the spiders last night when you saw the retail going down? You're like, because you know what? They'll just find something else to buy here, and that seems to be the mantra. Let's just take a look at our real quick here. The stocks that were getting killed. Macy's, let's see if it's been able to mount any kind of rebound.
They're still getting killed here, so
Yeah.
your retailers are going to be under significant pressure. But you made the great point. Is there's always something picking up the slack, and that's why the S&P futures have so much trouble going down, because money does not fly to the market. You used to get bad news like a few years ago, or even go back to like 7 or 8 years ago. When all bad news knocked everything down. Now it just rotates. Money is not. There's no fear out there, so money doesn't rotate out of stocks altogether because we're getting so much bad retail data. It just rotates into another sector. So, and what you're seeing move up here this morning is your commodity stocks and your oil stocks. Oil trading up here in the pre-market. You look at a stock like Chevron, it's trading up in the pre-market. ExxonMobil, ConocoPhillips. So you're seeing some money rotate there. We talked about gold. Gold is very strong here this morning. Gold's trading up over 1%. Silver's up almost 1%. A lot of your gold stocks trading up as well. Newmont Mining trading up 2%. Barrick Gold trading up over 2%. Goldcorp trading up over 2%. So you're seeing some strength there. A few financial stocks are starting to show a little bit of life. Some of your drugs, some of the continuation there. The drugs have been very impressive here so far in 2017. A little bit of continuation there too. I'm seeing Bristol Myers just all of a sudden turning green here. It was trading red just a little bit ago. So, and some of your more defensive names, even think about your utilities. Some of those are starting to turn around here as well. So there's always just rotation here. It's about identifying which sectors the money is going to rotate into.
All right. Have we talked about NVIDIA yet today? NVDA?
No, and it's been wild. The video was way up. It was way up in the pre-market, and it's giving it all back here. What was the news? Was there news here on the video? Because I saw it earlier. It was trading up significantly, and now it's turned around and gave it all back.
No news. It's just being a video.
Just watching the video.
You know,
So
I was watching this thing yesterday. I just have like the smallest lot of those puts I had that I just been struggling with, and it just had a crazy session yesterday. It rallied. This is just the pre-market, but man, where is this move here? It popped up to 105, and I talk about red green. And this thing, I was looking at one point, and it actually went red. It went red by like a buck, and I'm like, okay, I don't need to cover these. Maybe we'll go test that 99.90, 99.38. And then, man, that was just really short lived, probably a light intraday volume sell off. And then it just blasted right back. I believe, is that that CES going on? Is
yeah,
that today?
that's the
Mentioned in the
catalyst.
chat, they gave the keynote last night. I was keeping an eye out for anything this morning. I didn't see anything that like stuck out to me in particular. There was a
I think
thing.
it was trading up earlier because of the Consumer Electronics Show there, the
Yeah.
keynote that was there last night, and now obviously sellers have just emerged and it's giving it back.
Yeah, boy, oh boy. I tell you, it's just consolidating. I guess it had an inside day yesterday, so there you go. Maybe at least give me a couple days of consolidation so I can to make a move here. But this is certainly a moving target. I just wanted, before we let you guys go, just wanted to talk about Twitter yesterday, and boy, I wish I would have been playing the weeklies, Dennis. I could have gotten a nice pop off these things, but instead I'm stuck out here in the Februarys. But, you build the base here, and that's kind of what we talked about. Got a little rally up and not giving them back up 6 cents. And, man, I was thinking, Dennis, in the 2-day move, and I was all queued up to buy the weekly 17s, thinking, hey, this thing pops to 17 and a quarter, 17 and a half today with a large lot. I could make some money. But I said, I want to keep my New Year's resolution at least for 1 week and not trade the weeklies. Any thoughts on Twitter?
It's a classic January effect here. So you've got a little bit of buying the dogs. In 2016, Twitter was definitely a dog in 2016, and we've had a little bit of a 2-day move. We didn't really get off to the races there, like you were saying on Tuesday, because it did have that sell initiation there, which put some pressure on it. But now it has actually started to look a little bit more positive here. So looking better here. Again, sometimes these moves are short-lived. Sometimes they only last a few days. But initially you often see some of the dogs in 2016 catch a bid the first few trading sessions of 2017. That's what we're seeing in Twitter. We saw it in Fitbit for the last couple days. We saw it in GoPro a little bit there yesterday. GPRO catching a little bit of a bid. So you're seeing, but it's not only that. You've seen a lot of stocks catch a bid. So I think Bob Pisani was actually pointing it out there on CNBC. That not only the dogs are getting bought, but it seems like everything's still getting bought a little bit. So that's just this market. We're in this bull market that they like to buy stuff, and they're buying the dogs a little bit right now.
Yeah, NVIDIA, the keynote speaker at CES last night, so that was part of the enthusiasm in the issue. Any change? You really mentioned some small imbalances, Dennis. Are there any notable change in imbalances?
Alibaba's 135,000 to buy now. Alibaba is trading up. Twitter is 81,000 to buy as well, so that's looking stronger too. You know what I'm noticing, and just looking at little small caps like those small stocks, dry ships. DRYS is starting to catch a bit here in the pre-market. The stock obviously, had a ridiculous run in November, gave it all back here. Showing a little bit of life here right now, just in the pre-market. Just went in the last 10 minutes from $3.55. Somebody just bought up all the way up to $3.72 here. So you're looking, for the dogs there, at least the dogs of the last month. Dry ships probably fits that bill. So keep an eye on this one. This one could show a little bit of life here today.
All right, one quick chart here for Downward Dog ELLI. I think he asked about this one yesterday here. Ellie Mae, is that part of the same? What is that? Is that Sally Mae? Are there any of the Mays still around? What kind of company is this, Dennis?
You're kicking around still.
What is this, Ellie Mae? This thing?
The technology company.
Technology company,
Yeah.
huh? Oh, nothing to do with mortgages. All right.
You just see the May and you jump all over it.
Software.
Okay, Ellie Mae. I don't know. I mean, once again, accumulation here between 77.50 and 82.50. got a nice move out here on the dailies. I'm just looking at that one high right there, and that's actually two highs, 87.99, and that's your target. I think you for today with no news on it, you want to clear that. That's your first resistance point. Another minor resistance point at 88.85. Software for mortgages.
That's why they're going with the May.
I think Downward Dog's joking with me. All right, 8:59. You want to wrap up today's show, Spencer, and we got a good lineup tomorrow.
Good lineup tomorrow. Two guests for you. First one will be Julian Marchese. He is 20 years old and more successful than any of us. He runs his own hedge fund and portfolio manager. It's called Marchese Investments. This kid's 20 years old, still in college, and already managing outside money. So that's our guest number one. Guest number two is Peter Chur. You may have seen him on Bloomberg. He's on there pretty frequently. He is the managing director and head of macro strategy at Breen Capital. So two really good guests. Julian Marchese does algo trading, and we'll talk about how he automates his trading and how he does it. And then Peter Chur is a wonderful guest as well. So looking forward to both those guests tomorrow. If you miss any part of today's show, we're on iTunes, SoundCloud, Stitcher, and YouTube. Check it out on any of those platforms. Also, get your free trial of Benzinga Pro by going to pro.benzinga.com or calling us up at 313-723-2000. Please always remember that all the information, material, and content from our show is for informational purposes only, not meant to be investing advice. 9 o'clock now. Hope everyone has a good rest of your day. We'll be back with you folks tomorrow with Julian Marchese and Peter Chur.
Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks. Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks. Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks. Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks. Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of